Shall we have a quick conversation about the top 5 business debt consolidation loans for bad credit? If yes, stick around till the end of the convo. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How you doing today? I hope you are doing fantastic. I'm doing marvelous if you were to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to have a quick conversation with you about the top 5 business debt consolidation loans for bad credit. But before I get into the nitty-gritty, please check out our loans evaluation approach video. This will tell you a lot of info about the methodology that we follow to review all the loans, to categorize them, to rank them, and to list them on this show. Check this out. All right, let's just jump right into it. Number 5, Lendio. Our score, 9/10. And Lendio actually has a lot of pros and a few cons. Let's just go right into them. What are the pros? Borrower qualifications are lower than what banks have. You have access to multiple types of financing. You have a high borrowing amount, which is very important, which can be very interesting if you have bad credit because you need cash to turn your business around. You have long-term financing options available. Applicants can quickly be pre-qualified. The application process is fast and easy, and customer service is fantastic. On the con side, on the drawback side, rates can be expensive, which is something that one can expect, especially if you are talking about the subprime category, people with bad credit or businesses with bad credit. So another disadvantage is that funds can take a while to disperse. Even though the application process is fast and easy, funds can take a while to disperse. And in terms of requirements here, the business has to be you have to be in business for 6 months. So the business must have been operating for 6 months at least. Business revenue, $10,000 minimum per month. The owner's personal credit score should be 550 at least, and the term length 12 to 48 months, so 1 year to 4 years in terms of the loan duration. One thing I kind of like here, as we were going over our team was going over the loans and we were reviewing all the loans, we noticed that Lendio is a great platform. It's a business financing platform that matches customers to funders, and they have done a great job in terms of technological innovation. The app is fantastic. The website is clear. It's user friendly, and Lendio does not, because they're just a platform, they do not originate loans directly, but they have a very broad network of over 300 business funders, including big names such as KWABENA, OnDeck, Amex, BlueVine, and many others. So they are actually the platform is designed to be a one-stop shop for financing. And one thing that I also want to say is that the Lendio is pretty cool when it comes to educating the borrower rather. So they have a lot of resources, a constellation of articles, blogs, and a lot of tutorials that help the borrower really understand what they have to do to improve their credit score, right? Number 4, we have OnDeck. OnDeck, our score 9/10, and for OnDeck, the time in business is 12 months. Business revenue must be at least $100,000 per year. The business industry is pretty broad, but the business should not be in a restricted industry, right? We all know the restricted industries, things like adult entertainment and anything that is illegal, even though adult is not illegal. But what I'm trying, you get the point, right? You get the point. So it must be in a normal, quote unquote, normal industry. And the owner's personal credit score must be 600. And the term length, the loan duration is between 1 year to 3 years. What are the pros and cons of the OnDeck business debt consolidation loans for bad credit? So borrower qualifications are lower than with banks. That is very cool. You have multiple types of financing available. Lower cost for repeat customers. The application process is fast and easy. Funds are disbursed quickly. We love that. And you can actually use the funds to build business credit, because OnDeck will report the business performance in terms of repayment to the credit bureaus, both at the personal level and at the business level. What are the cons? Financing is not available in some states, and financing is not available to businesses in some industries, and rates can be expensive. And the thing here is that OnDeck gives term loans up to $500,000 to qualified borrowers. So you can apply to receive long-term business debt consolidation loans for bad credit. And the duration, as I said earlier, between 12 and 15 months to 36 months. And OnDeck long-term loans have annual interest rates as low as 9%, 9.99, so that's 10%. And they charge an origination fee of 2.5% to 4% of the loan amount added to your loan. But second and subsequent loans have reduced fees. One thing I also want to say here is that, and going back to number 5, Lendio, that Lendio, in terms of the loan amount, you can actually expect up to $1 million, and you can have rates. The term lengths are from 1 to 5 years with rates as low as 6%. And credit, revenue, and time and business requirements vary by lender, but the more solid your business history, the better rates and terms you will receive. So that was for Lendio, just so opening a quick parenthesis there. So coming back to OnDeck here, one thing I also want to say before moving on to the next one is that if you need a loan fast or don't qualify elsewhere, it's hard to beat OnDeck. Because despite the potential drawbacks that I just spoke to you about, OnDeck is transparent, customer service is easy to get in touch with, and overall, most customers report positive experiences. Number 3, we have BlueVine. Our score, 9.5 over 10. What are the pros and cons of getting a business debt consolidation loan for bad credit through BlueVine? Financing is available for startups and entrepreneurs. Low credit score qualification. The application is fast and easy, and funds get disbursed very rapidly. Those were the pros. Those are the pros. What are the cons? Financing is not available in some states, and rates can be expensive. Repayments are required quickly, and customer service is inconsistent. One thing I want to say about the rates being expensive is that if you are talking about the subprime, the business equivalent of subprime category, of course, if there is a bad credit at the business level or at the personal level, of course the rates are expected to be expensive. All right, so this is something you just have to think about. And one thing I want to say here is that the requirements are pretty clear. Time in business must be 3 months minimum. Credit score 530 minimum. Business revenue $10,000 per month, and the term length 12 to 42 months. And what we love here is that besides debt consolidation loans for bad credit, BlueVine also offers invoice factoring. And this is a type of business financing for B2B businesses in which the unpaid invoices are sold at a discount. And if you don't process invoices, BlueVine also offers traditional lines of credit. So what I'm trying to say here is that if you want to consolidate the loans at the business level and you can't get a traditional loan to consolidate, you might go to BlueVine because you can get other forms of funding that would allow you ultimately to consolidate your business loans, and that will make it a lot easier for you to actually get the loan. And because BlueVine loans can be expensive, we just want to advise you here out there to make sure you fully understand the cost before accepting any financing offer from this lender. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation here about the top 5 business debt consolidation loans for bad credit. And I want to talk to you now about number 2. That's credibly. Our score, 9.5 over 10. What are the pros and cons when it comes to credibly? First, the pros. We like the fact that this lender requires low credit scores. In other words, they have low credit score requirements. They give you discounts for repaying early. Funding is suited for business growth needs. The application process is fast and easy, and the website is clear and informative. And on the cons, the drawbacks. Rates can be expensive. Of course, that's expected. I've already explained why. Some additional fees are charged, and a blanket lien is required. Overall, what I want to say here is that the time in business should be 6 months, business revenue at least $15,000 per month, and the personal credit score 500, and the loan duration 12 to 30 months. So that's 1 year to 2.5 years. And overall, it's important to understand that Credibly is an online lender that offers short-term financing in the form of business loans and merchant cash advances. So Credibly's qualifications are much lower, way lower, but its origination fee is high. So if you are in a pinch and don't have access to other financing options, Credibly might be the lender that works for your business. And they're based in Michigan, and they are an online lender. And the thing here is that they have great customer service, great platform, very informative, very intuitive, user friendly. And this is one of the companies that has really understood the whole wave of fintech, and they have used it to their used it to their advantage. And Credibly might be able to help small businesses receive financing even if they don't qualify elsewhere, right? And please make sure that you read, because again, the Credibly's financing products can be expensive. So make sure that you read the fine print, you understand the cost before accepting a funding offer from this company. Anything else I want to say? No, I think this is about it. Let's move on to the next company. Number 1, drum roll, when it comes to the top 5 business debt consolidation loans for bad credit. The best out there based on our analysis and our review. The best is Loan Builder. Our score, 10 over 10. This is the lender with the best offer out there today when it comes to consolidating business loans for bad credit. And what are the pros and cons? The pros, the borrower qualifications are lower than banks. They have low credit score requirements. There are no extra fees. The application process is fast, easy, and transparent. And even better here, funds get disbursed quickly. So that's fantastic. What are the pros? What are the cons rather? It's not available to businesses in some industries. So they have a list of industries that do not qualify based on the nature of their activities, right? Another cons is that there is no discount for repaying early. There's no long-term financing options, and there is a blanket lien is required. So this is something you have to kind of think about. I just want to say that, in terms of the main requirements, time in business, 9 months at least. Business revenue, $42,000 per year minimum. Personal credit score, 550 minimum, and the term length, the loan duration, 1 to 3 years, so 12 to 36 months. And one thing I also want to say here is that Loan Builder will offers a short-term business loans and lines of credit in which you repay a predetermined fee instead of interest. So to check, if you want to check eligibility, you simply need to fill out a short questionnaire online, and if you are pre-qualified, you can see your estimated terms and fees and adjust the loan amount and get term length to your liking. And one thing I want to say here is that people, we've heard this conversation on the internet. People are saying that Loan Builder and PayPal business loans are one and the same. In fact, you may notice that when you begin the application questionnaire, the service is called PayPal Business Loan instead of Loan Builder. At one point, there had been plans to phase out the Loan Builder brand name, but that hasn't happened yet, right? So one thing you have to understand is that Loan Builder, which is also a service by PayPal, is different from PayPal Working Capital, because like Loan Builder, PayPal Working Capital provides short-term business loan, but the difference here is that you use the Loan Builder loan to consolidate your business debt, whereas the PayPal Working Capital is used for, as the name implies, working capital needs. All right, I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I want to close today's conversation here, and I want to say that the top 5 business debt consolidation loans for bad credit include: number 1, Loan Builder by PayPal. Our score 10 over 10. Number 2, Credibly. Yes, Credibly. Our score 9.5 over 10. Number 3, BlueVine, 9.5 over 10. Number 4, OnDeck, 9 over 10. And number 5, Lendio, 9 over 10. I'll see you next time. Thank you so much for your attention. Really appreciate it. Until next time, stay marvelous.